Adrian Orr's with us. Very good morning to you.
Good morning, Mike.
So, in layman's language, last week you couldn't have been more bullish. Was it Trump on Thursday and Saturday, Ardern on Saturday as well, that turned you?
I wasn't bullish last week. I think that's a misrepresentation. We were saying that we have a lot of tools that we can use, and we were explaining those. And we were preparing ourselves to have to put unusual actions into practice. We were never sure when, but certainly over the last 3 to 5 days, it's been pretty dramatic with regard to the amount of, I suppose, impost on people and trade movement globally.
How close were you to a full point?
We want to stop at 0.25%, and we've made it very clear that we're going to keep the official cash rate at that level for at least 12 months, and we did that to provide certainty for those people who are pricing longer-term interest rates. We want to generate certainty, and we don't want to have a negative interest rate, and we've made that clear to the banks as well. Some banks are just not operationally ready, but we've got other tools that we think are more effective if we needed to have further easing at some point. It will be the same end game we're playing to keep the inflation low and employment working. But the real challenge will be using other tools rather than just the interest rate tool.
Have you changed your mind on that to the extent that last year, for a period anyway, there was some discussion around the possibility, remote as it may have been then, of negative rates? What's changed in that?
The main thing that's changed, we've been working through a whole suite of tools. So the interest rate tool was an obvious one. What we've seen is that some of the banks are just not operationally ready. And that is fine because we try and work through these things in peacetime, and then suddenly these emergencies arrive. The good news is we've got 3 or 4 other very effective tools we can use, and are probably more effective for this type of shock. That includes large-scale asset purchases where we can just enter the secondary market and buy government bonds, releasing cash, keeping interest rates low, so we achieve the same outcome, but without the complexity of a negative interest rate.
Let me come back to that in a moment. What role does today's announcement from Robertson play with what you did yesterday? What do you expect specifically to see?
It played a critical role. So the Monetary Policy Committee, we made our decisions, our series of announcements, in full line of sight of at least the major bits that we needed to know from the fiscal package. It will be both targeted and it will be very broad-based. So it's quite a complex combination, which is very impressive given the short time period. I'm not giving anything away from publicly there in the sense that targeted around health, targeted around wage subsidies, working with industries. So it's a very comprehensive package, and I'll leave it there for the Minister to unveil.
Indeed. Do you see it as a one-off? Or the reason I ask that is Morrison last week threw 20 plus at Australia, and he's already thinking of a second go. Is this one today going to be the big one, or is this just one of what could be a number?
We're just going to have to roll with it. Both fiscal policy is definitely the better tool. Monetary policy is playing a support role. But both monetary and fiscal policy will just have to roll with it. So never say never. This is about getting a very good head start. Probably the bullish bit you referred to is I was saying that the New Zealand economy is in a great starting position for a difficult period ahead. So this is about saying let's get ourselves on the right footing. And let's do our best through this.
What do you need to see specifically out of your decision and today's decision to go, this is working?
The biggest thing is that we see the financial system doing its job, and that was something I'm very pleased of, very proud of our banks and the financial market participants, where they have been passing on the interest rate cut, but more importantly, remaining calm of head in the money markets, the foreign exchange market, and the debt markets as best as they can. Our job at the Reserve Bank is to make sure that this financial system continues to operate effectively, and it is. We've also been in a good position where, because the banks have had to hold high capital levels, we're saying you can use those. You have a buffer over and above the minimum. Use it. That would pump around $47 billion into the economy if they open their shoulders on that. And then there's about the same again before they reach a regulatory minimum.
Yeah.
So this is why we wanted to have strong capital buffers.
But unless you're giving me the money, which you aren't, the government might be, you're relying on me to feel bullish enough to be involved in a marketplace and borrow. Why would I? And does that worry you?
I'm not relying on that. I mean, monetary policy has many channels. The first one, of course, is the obvious one of keeping pressure off the exchange rate. That makes good effort for our export earnings, and trade will continue to be flowing. The second one is it frees up an enormous cash flow for businesses so that they can think hard around how to bridge the gap between now and business as usual.
But that's a confidence thing, though.
No, it's real. It's physical. They have more cash in the tank. They are paying out less. They are saving more. And then likewise for households, it's a similar one. And also asset prices. They are the present value of future expected earnings. And when you're discounting that at a lower interest rate, it supports asset values as well. So there are many channels, but I agree. There's the confidence channel. That's the human spirit, and that's what we're saying. Just stay calm. This is very different to a sense of the global financial crisis. I mean, that may be an interesting scalar, but we can see the end of this, and it's just a matter of working through. The systems are working, the financial markets are operating. It's not about, wow, what's happening next?
Really simple question. On a scale of 1 to 10, 10 you're freaking out, 1 you couldn't care less. Where are you?
I would be 6, and I view 6 because the systems are working. It's a tough time, empathy for everyone involved, but far from a 10.